here, ShortMeTina.com, with my daily recap March Blitz. We continue where I'm going to do a video every single day for the month of March, Monday through Friday when the market is open. I'm going to try to keep it really short and to the point. I only got 3 on my radar today. I always kick it off with the SPY. So this is the S&P 500. It's a daily chart dating back to 2019, but I definitely want to focus on this uptrend that has been in play since March of last year after we bottomed or got that bounce after this huge pullback, huge retraction during the COVID pandemic. In March of 2020, we went as low as 218.26. Buyers stepped in and said, enough, we've had enough. And the market, for the most part, the market has trended up with pullbacks since then. This uptrend here remains intact. And how I know a trend line is relatively strong, it's the amount of times the market actually bounces off that trend line. Now, this is up for, or this can be, let's say this can be rather subjective, but just on a basic level, we can see that it bounced here. 1, we can call that 2, we can call that 3, we can call this 4, 5, 6, 7, 8, because the last few trading days, right, if we zoom in, the market really has been flirting with this trend line, breaking a few times. So just to revert back to how I look at trend lines, the more times the market actually bounces off and hold, for me, that means that trend is intact, right? It's a relatively strong trend. So again, we're up a little shy of 1% on the day, closed at 389.58. And well, full disclaimer, I am actually short the market, although the trend has remained intact right here. You can see it here, the trend line. Again, we broke it a few times last week, but we've managed to recoup, right? And so what I'm paying attention to here, and I think this is rather interesting, this doji here after this uptrend with confirming selling volume, I'm curious to see if the market can again build on this rally or if we roll over. Obviously, if we roll over, that benefits me because I'm short. If the market continues to rally, that'll still benefit me because of how I'm positioned. But right now I'm betting that the market is actually going to pull back some more. I'm not saying this is the beginning of a complete meltdown, but I still think there's a possibility that we're going to break this trend line once again, like we did here, here, and here, just based on what I'm seeing within volume. All right, to be continued. What else? All right, GameStop. Let's look at this from an hourly perspective. I'm not in this trade. It's a little way too volatile for me. If I wanted to get into this trade, it definitely would have been way back late last year when no one was in the trade. Let's go back, right? Let's go back to show you where I would have loved to have positioned myself, like at minimum around November of 20, when you can see here very little volume, very little activity right before this spike here. I don't really like to get into trades around here, but you know, everyone's different, to each their own. So this is an hourly chart. GameStop in play. I believe the stock was halted at minimum once today. I wasn't following it like that, but I know that it was halted. I think I saw that somewhere. It closed up about 7% on the day, completely all over the place, right? Again, closed at 263.01. It looks like it's up in after hours, just based on what I'm seeing here. I see 266.71. It's probably up a little bit more in after hours. We went as high as, and I say we, not me because I'm in it, but the stock went as high as 347.67, and it has since pulled back. So for me, this red line kind of signifies, well, obviously, the optimal place for the stock to trade above, right? So if it remains above 100, I still think that that's actually good for GameStop if it actually remains above that $100 mark. But looking at a more recent level of support, right, where it's at the most strongest, in my opinion, would be above 200. You can see here, after this uptrend, it looks like the stock is consolidating a little bit, at least on the hourly time frame. So if it can stay above 200, I still think that there is a possibility that the stock will go on to do what it's been doing for the past few weeks or months, and I expect more volatility in GameStop. Again, not my cup of tea, but if you're looking to get long, or if you are long, I think that it is the most strongest if it's above 200. What else? All right, so we're gonna wrap it up with a ticker, right? Well, that's so silly why I said that, a ticker. Every time I do a video, I'm talking about a particular ticker or stock. But anyway, so we're just gonna wrap it up with XLF. It's up 2% on the day. Now this is a financial ETF, and the reason that I'm showing you this is because going forward, just based on what I'm seeing here, it tells me that it looks like this is going to be the next sector that everyone wants to be in. Financials, you can see here, this dates back to 1999. Do the math, that's like a lot of years, right? So basically financials have been sort of in a range since 99, since .com, since 2000. Look what's happening here. About 21, 22 years later, it is breaking out. So that tells me that it looks like the next place that investors are laying their money. And I don't understand why, for the love of me. If anyone understands or can build a case for financials, please do it for me. But I'm just paying attention to the technical charts, and it's telling me that financials might be the next best thing. And so going forward, I would say for the remainder of 2021, maybe even 2022, I'm actually going to look for financial stocks to get in. And over the weekend, I spent my time looking through a lot of charts, and this one, well, there were a couple others, but this sector in particular was just sort of like screaming at me. I mean, to break out of a base for 2021 years, that's massive in my opinion. Now, obviously, it can fail. Like this breakout cannot, there's a potential that it's not going to be sustained, but I'm going to be watching this. It just broke out, right? That breakout level, let's call that 30 to 32. It's just sitting here at 34. So I like it. I actually like financials, and that's probably where I'm going to be laying my money while everyone is in tech and Apple and Tesla and GameStop. I'm going to be looking at financials. All right. So just letting you know, take it for what it's worth. So let's cap it there. Tina here once again from ShortMeTina.com. If you enjoyed any portion of that video, do 3 things for me. 1, like, comment, build that case for financials for me. 2, right now what we're doing on our website is we're hosting a free 14-day trading course. I've been trading for a long time. I've been trading for about 20 years. And again, I went from being inconsistent to consistent to building up a methodology and a system and all of that, blah, blah, blah. And I talk a lot about that in the free 14-day trading course. The things that I tell you in that course are things that I employ to this day. So if that's something that you're interested in, it's completely free, just an email, no credit card needed. Head on over to our website, ShortMeTina.com, sign up, become a member. Thank you for listening, and as always, thank you for the support. I'll see you tomorrow. March Blitz continues.